Hi guys, good evening. Good evening. I'm sure we are all, I think, the same time zone. So right now we have Jamila, we have Shada, and we have Elizabeth. So I've tried to contact every other person. Some are on their way home and stuff, so they will join the call when they can. And if they can't, they will watch the recording. So today we are having Temitope, and she's going to be joining soon. In the meantime, okay, let me share my screen. Let me share my screen. Why is it not showing? Can you guys see my screen?
Yes.
Okay. All right. So today is our fourth session.
What can be? What can be?
What do you say? Can you hear me?
Yeah.
Okay. Sorry. Let me do this again.
This one
All right. So today is our fourth session. Ideally, this is supposed to be like our last session. But because we have a this thing, our book review session, because we have our book review session that is going to be happening next week. So this is our second to the last session. And this is one of my most exciting topics so far. So we're looking at how to set smart financial goals. And next year it's next year already. We are just 1 month away from a new year. It is very, very important for all of us to set like financial goals based on the things that we want to achieve next year and to quantify them because that's the most important part of it. So, um, so we've done right now we are on the eighth item on our list on our program outline. We're on the eighth item, which is setting financial goals. After this, you all will book one-on-one review session, and then next week Saturday, where we are having our final session, we'll do a that is where we're going to be having our final session on book review. So no need for me to introduce myself. You guys know me. We all know ourselves right now, and we are not even much on the call. So in the next 2 minutes, Elizabeth is going to be on the call because last week we couldn't finish our session. So she's going to join the call and walk us through investments before I will now proceed and talk about our session for today. So basically where we are is we've done budgeting. That was like the first thing we did. We've also looked at tracking our spending. So I hope you guys have been updating your spending on. Dada, I know you are doing that. Um, Elizabeth, have you been able to update your tracker?
Yes, I'm trying. Like I'm updating my budget. That's
You're
mainly
trying. Okay, no problem. We'll have a one-on-one session soon. So make sure
session.
you're
Yeah, before our one-on-one section, everything will be updated.
okay. Jamila,
Yeah.
I hope your budget is up to date too. Your expenses, I hope it is up to date. Is Jamila still on this call? Abdulmalik, I see you've joined the call. Oh, you're
Sorry,
having
I'm
a
here.
bad network. Sorry. Okay, Jamila, I
Sorry,
was asking, is your tracker up to date?
not yet, but I plan to do so soon.
Please do so. It has to be up to date before our one-on-one session.
Okay.
Abdulmalik, welcome. How are you doing? Hope your network is better now.
Thank you. Thank you. Yeah, I can listen to you.
All
Yeah.
right. So I was asking, is your expense tracker up to date?
Yeah, not yet. I'm planning to update it this Sunday
All right,
or
that's
Monday.
tomorrow.
Yeah.
Tomorrow is Sunday. Tomorrow is weekend. Please try
Yeah.
to update it tomorrow. Thank you so
Yeah.
much. All right. So today, okay, last week we did savings and investment, but unfortunately, because of network, we couldn't complete the investment part. And right now we have Temitope on the call, and in the next few minutes, she's going to walk us through that. So basically, today we are doing a bit of investment, and then we'll go into setting financial goals and how we can increase our income. So Temitope, can you hear me?
Yes, I can. Good evening, everybody on the call.
Good evening. So please, will you be able to share your slide?
Yes, I
All right.
will. Just give me a minute.
Thank you so much.
Sorry about what happened last week.
No problem. No problem.
Our Ninja factor came into place.
I can relate. Sorry.
Please let me know when you can see it, please.
Yes, yes, yes.
All right.
Can see
Okay,
your-
so good evening once again. We already covered like the basic stuff last
Your
week.
slide is small. I don't know. Is there a way you can make it show
Okay,
bigger?
for me to
Yes,
zoom a bit.
zoom
Okay.
it. It's showing two at a time.
Okay.
Yeah, I think this works then.
Okay. All right. Is it better now?
Yes. Okay, yes, yes, yes. It works now. Yes, this is perfect. Will you also get to see your face? Or we are not seeing your face?
Not yet.
No problem, no problem. Please go ahead.
All right. So, like I said, we already covered like the basic stuff last week. So I'm just going to do a quick recap on what we talked about last week, which was on savings, the key features of savings, and then the key features of investment. Like I said, low risk for savings. Nobody really expects you to make that much. You're just putting your money aside. You can easily access your money when it comes to saving, but with investment, you are thinking long term. You are taking a risk and you expect something back. And also, we talked about the short term and the long term and the other goals that we have when it comes to investment. These are the things that will drive the kind of investment you want to go into. If you are trying to build an emergency fund, if you are trying to relocate, or is your lifestyle that you want to change, these are the things that will determine the type of savings and investment you will do. And also, if you are thinking long term, like, okay, where do I want to be in the next 50 years? Do I want to have a comfortable retirement lifestyle to be able to tour the countries of the world, or to be able to afford a very sensible apartment or a big mansion? So these are the things that will drive your long-term goals and the type of investment you will do. And also we talked about the career growth. You want to be better in your job. You want to be getting promotions every year. You just want to develop yourself personally and professionally. They are the kind of things that will drive your investment in yourself and the kind of savings to accomplish this. So let's now go to factors to also consider before you save and invest. The number one thing is inflation. There's inflation everywhere in the world. The price of things yesterday is definitely not the price you will meet it when you go back to the market tomorrow. So whenever you want to invest or save, you have to study the inflation that is happening in your current environment. For example, in Nigeria, inflation is around 30 something percent. So which means things have increased drastically from last year by almost 30 something percent to this year. And that is across major items like food and basic needs. In fact, landlords are also increasing rents. So when you want to invest, you have to also consider the return you are getting on this investment. Will it reduce your purchasing power in the next few months or in the next few years or on a long term if inflation keeps growing at this particular rate? So that is why most people, most financial advisors will tell you that you should take high risk if you have high risk appetite, because they believe that the returns you will get from it will be able to cover up for that inflation growth.
Yeah.
So if you want to make this investment, you have to first of all consider inflation. And if you are someone that wants to do investment or savings in, let's say, dollars and FX, and because maybe you want to relocate to those countries tomorrow, you will have to also study the inflation in those countries, because you can be saving in dollar in Nigeria here, and maybe the inflation growth there is even maybe 70%, and you just have 1,000 pounds or $1,000 in your account. It might not really be enough for you to keep up with a particular lifestyle when you get to that country. So whatever country you want to take risk, or you want to invest or save in their currency, you also have to study the inflation that is prevailing in that country, especially if you want to move there to live. The second one is government policies. We know that in Nigeria, this government will come today, scatter everything, start afresh. Everybody that puts money somewhere, the money has gone. I remember when crypto happened. If you were not doing crypto in Nigeria, you are not investing. Everybody is doing crypto. Then government came and said, no, we don't want crypto. We are not going to legalize crypto. That government policy made some people lose money. Even though some people were smart enough to quickly move those funds to some other form of investment, or maybe move them to using is it VPN to be able to access those apps that allow crypto trade. So all these things, you have to also study them. Another thing about government policies, if you are someone that is investing in a particular industry, let's say manufacturing industry, all your shares that you are buying, they are in manufacturing industry. And government now says and say, okay, this manufacturing industry, we don't want them to import anything into the country again. They must be producing everything that they are using to manufacture goods and services in this country. That means the value of that country might drop. And that will affect your investment because you've bought their shares. So you need to keep updating yourself on different government policies that is driving your choice of investment and savings. The third thing is global factors. I've mentioned global factor briefly in that inflation, which means be studying other countries, what is going on in the other country, because the world is becoming a global space where people want to be able to move their wealth across borders. So whatever is happening that is going to affect maybe trade, that is going to affect your country, you also need to be aware. We have some people that have huge investments in Ukraine. Immediately the war started, they quickly moved their money to another country so that it will not affect their investment. So if you are someone like that, so that maybe you started, someone came to meet you and say, Zimbabwe, they now have huge gold mines. Come and put your 5K in Zimbabwe. And then one now starts in Zimbabwe, you cannot withdraw your money. You cannot access your funds. You'll be stranded. The fourth thing, again, is market sentiment. This one really applies to those of us that we like to follow the trend.
Bandwagon.
Yes. What is raining? Let me to join them. Everybody is buying GTB shares. Me too. Let me go and quickly buy. Let me not feel left behind. Everybody is buying MTN shares.
MTN.
Everybody is doing Kinikon. Everybody is doing MMM. Me too. I will now look like the stupid person that is not doing MMM. Before you know it, some of these people might be using influencer to promote this investment.
Yeah.
So you yourself, you study the market sentiment and then you do your own research. If this thing is actually what they are saying it is, do you get? Everybody is saying, go and put your money in GTB, go and put your money in shares, go and buy international. And remember, I think it was last year of 2022, the market sentiment about ETFs and foreign shares, it was as if every influencer was jumping on
saying
it.
the same thing. Yeah.
Exactly. Every time you click on one video on Instagram, the next thing you will hear is, if you're not buying Netflix shares and you're not buying Microsoft shares, I don't know what you're doing with your life. Truly, I don't know what I'm doing in my life, but I don't understand this thing. Let me, first of all, try and understand it before I jump into it. Does my money, my current income, does it afford me to jump on this bandwagon? Does it afford me to jump on this recent trend? So you need to also study the market sentiment and do serious research on whatever information you see out there. Now, let's talk about the common investment returns in Nigeria. Don't mind this huge table, it's just wide, honestly. So we'll talk about the investment options, the risk, the benefits, and some examples that you can consider. The first one is stocks or shares. Everybody knows that I want to be a shareholder, especially now in Nigeria that all the banks are now going towards raising shares because CBN, yes, CBN said they should go and look for capital to increase their capital base. So everybody's in the market. That will also drive market sentiment and say, oh, you don't want to be a shareholder in GTB. Do you want to be a shareholder in Access Bank? So what does this shares also mean? It means that you want to be one of the owners of the company. You want to be able to say, okay, when they want to vote, when they want to make decisions, because sometimes when they want to make decisions, they will just send some forms to major shareholders to fill. They also want to be part of the people that are involved in that decision making. That is what shares means. And one of the risks is market volatility and the company-specific risk, and also there's potential for capital loss. So I'm going to explain this like this. I'm going to, forgive me that I'm using GTB. I don't have anything against GTB, but because they are I think they're like our, I don't know how to put it. Everybody's
Like
using GTB.
our McLean for toothpaste. Everybody says
Exactly.
GTV for
Our Indomie for noodles. Exactly.
yes.
So now market volatility. So because most banks are in the market raising shares now, it can also affect the price of all these companies' shares, because there's a lot of market sentiment that is not going to drive it. I remember when Access Bank was maybe in the market, and then there was this news that came on about them, and people were like, go and remove your money from Access Bank. The same thing also happened with GTB, that they said their mobile app was not working, their distance thing was not doing that. That thing also affected their share price. Do you get? So that's volatility, because it is not like it is assured that because I bought this thing at 20 naira today, it is assured that it will not go below 20 naira. It will just keep increasing. It is not assured. You can buy it 20 naira today, and tomorrow morning when you wake up, it is 10 naira. Market volatility, market sentiment drives the value of shares, and also company-specific risk. So the company might also be having their own risk that might affect their operations.
Yeah.
As we are all saying that GTB is one of the biggest banks in Nigeria, they can come out tomorrow and say they are filing for bankruptcy. And they will start giving us all this, oh, we've been having liquidity risk, we've been having operational risk, we've been having kiniko risk. So they might have their own.
The way Skybank just disappeared
Exactly, the way Skybank just like that. So, and Skybank was one of the top banks at that time. Do you get? They were part of the people that it will look like they cannot fail. But when the company-specific risk happened, I mean, they actually failed, and something else had to happen to save them from losing everything. They have to ask people to come and buy them off.
now.
So, and also there's potential for capital loss. The fact that you've invested in a company does not mean it is assured that you will get something back. So your capital might not really mean so much in the next few years, especially if that company is not performing well. So if you invest, let's say 1,000 in a company today, that does not mean in the next 5 years, your 1,000 naira will now become 5,000. It might actually go back to 500 naira. The value of that 1,000 might go back to 500 naira. So there's potential for that capital loss. But the benefit is that you get dividend. And that is where the high returns comes in terms of dividend income. And also, you can also booga and say, I'm also the owner of a company. Even if your share is just 4 naira, you are also the owner of a company. So these are the benefits that comes with shares. And these are some of the example of current shares in this space right now. So let's go to bonds and treasury bills. These are government instruments, right? I know a lot of people don't really know much about these bonds and treasury bills. So when government needs money, it's like when government is borrowing money from people. So when government needs money, maybe on the short term or on the long term, they issue these instruments so that they can get the public to give them that money and promise them that this is the return you will have on this money. For example, they can say they want to build one bridge from maybe Lagos to Sokoto, but they don't have money to build that bridge. But the bridge construction can take maybe 4 to 5 years. The government can issue bonds and say we will need 500 billion and people should come and buy these bonds. And then they'll be giving you interest, maybe 20% every year on these bonds for the next 5 years. And after that 5 years, you will get your capital that you invested in it back. And if it is treasury bills, those ones are usually short term. They are within 1 year. So you can buy T-bills of 90 days, you can buy T-bills of 180 days or 360 days, but they are usually within 1 year. And then they also have their own rates. One of the risks is interest rate risk, right? Interest rate in the sense that before now, the rate on T-bills and bonds are usually low. Because of the way the economy is moving, T-bills rates are now very, very high, right?
Yeah.
But that does not mean the fact that it is high today, it cannot go low tomorrow. If the government is doing well and the economy is doing great, the federal government can say the T-bills that we released last few weeks at 22%, we are going to release another one this week and we'll put it at 15%. And that will affect, like, even though you bought the one of 22% before, by the time you want to buy the next one, you are buying it at 15%. So that interest rate will affect your income. The second one is the credit risk. So why I'm putting the credit risk is that it's not as if the government will not pay you back. The government will definitely pay you back. But something happened in Ghana between late last year and early this year, where Ghana issued a bond and they could not redeem it. And then it became like a global news that some governments might not be able to pay you back. Because the idea is when you borrow government money, the worst that can happen is government will go and print money and pay everybody back. Something happened in Ghana that kind of changed that dynamic. Yeah, so people now start believing that, okay, there might be some issues that can happen and the government might actually not be able to redeem the bonds or whatever bills that they put out there. And there's also potential for capital loss in the sense that the inflation rate might erode your interest. If government is not giving you consistent high rates and the inflation is multiplying on day by day, it will erode your capital and your interest. But the benefit is that you are sure that you are getting your stable returns. Nothing is going to affect your money. It is very predictable and it is lower risk. If you put your money in government hands, you are assured that government is going to pay you back. The example are you can buy different type of bonds and bills through any of the brokerage firms. You can buy from iInvest, you can buy from, and I think Patian also have their own platform. Different platforms are where you can buy the government bonds and bills. The next one is real estate. This one, they used to call it blood money. It's the Odogus that used to do real estate. But now, there are also platforms that will say, okay, bring money and invest in land and properties. And then when some developers will develop the land, by the time they resell those land and properties, they will give you your returns back. But property market fluctuation is also one of the main risks. There's maintenance cost on those buildings as well. So which might also affect your returns. So we can have some fraudulent developers that have platforms that might appear legit, right? They will ask everybody to bring money that they want to complete one building in Lekki in the next 6 months. And in the next 6 months, you will get 70% back. Very, very careful. Even though real estate is like blood money, but at the same time, you also have to be very careful. And then they will now come and tell you that, the money we are using to maintain that building now is now 1 billion. So the 70% we promise you is now going to be
now
20.
So
that's why there's potential for negative cash flow, because you will have forecasted your cash that, okay, in the next 6 months, I'll be collecting so amount of money. And then by the time they come and they'll tell you that the value of the property in Lekki Ekpe Road is no more 150 million. Maybe it has dropped to 100 million. it will affect the cash flow that they will pay you back. So that one too is not fixed. It is based on the value of the property where it is located. Although the benefit is that there's potential for capital appreciation. Most times people they say in accounting, land no dey depreciate. So if you invest in land in the next few years, your land will have appreciated. Then you'll be able to get money. Also, if you are able to get a legit real estate firm, you might be able to get rental income by the time you give them money to develop these buildings.
Yeah.
Also, if you are one that is the owner of your building, you might be able to gain some tax benefits in terms of capital gains and all of that. So the examples are real estate investment trust. There are different types. I think there's Property Pro and the likes that they do this real estate investment.
Yeah, PiggyVest also. On PiggyVest, you can get like small units, and then there's is it Rice? No, not RiceVest. There's another, I've forgotten the name of that one too. But you have to check that the apps are like very credible. So those are the kind of like platforms that you can put your money and buy a unit of maybe a part of the house.
Exactly. So that's how it works. So the next one is mutual funds. This one, I like it personally because it gives me peace of mind to some extent. So it's a pool of money from different people in diversified portfolio. And the only risk that I will probably say is the market risk and then the fund management fees. So some fund managers can say, okay, we'll be charging you maybe 1% or 0.5% of your investment, maybe upon maturity. And there might be potential for underperformance depending on the portfolio of investments in that mutual fund. So why I like mutual fund is it gives you a peace of mind to be able to play around. So if you are able to research mutual fund, you will see that they will put your investments in money market, they will buy T-bills, they will buy shares. With the same 5K that you gave them, they will just put everybody's money together and do these different investments, and then the returns, they will tell you are collecting maybe 22% every year. So for someone like me that I'm not really sure of the shares that I want to buy, or the type of T-bills that I want to buy, or the type of bonds I want to buy, it's easier for me to say, okay, let me give this money to mutual funds that have high rates and they are very credible. You can give them the money. So they are trustworthy to do that research and then put your money in this different pool of investment, and you'll be able to get your returns back. So that is why I like mutual funds. So the benefit is diversification, and then there is professional management, especially if you are doing it with credible organizations. Then yes. So, and then you have access to a variety of asset classes. Like I said, you'll be able to access information about bills, about bonds, about stocks, about different fixed deposit, in fact, they even do foreign investment as well in that same mutual fund. So you'll be able to access to different types of investment that your 5K is doing, and then the returns that is coming from it. And example is Stanbic IBTC. They have their own mutual fund platform. Tiva also has, then SAMTL also has. SAMTL is telling asset management and trustees. So they also have their own platform where you can do this mutual fund.
Yeah, there's also like I think Chapel Hill Denham,
Yes.
Heirs Insurance too. So usually if you want stuff like this, all those asset management firms that have established presence, those are like the right place for you to get this kind of access to this kind of information.
Yes, and they are very easy. Like most of them, they have very easy process. It's not like some organization that you want to do investments that it will be asking you for blood samples and different things. No, their own is just on the platform, and they are credible. So if you are using those ones that have physical presence, and then they have credible digital presence, it makes you have like you'll be able to get a lot of information and be able to research. You'll be able to have one-on-one sessions with them in case you need clarification on anything. So that's why I prefer them. And you can ask them questions on different type of investment. Like, okay, I'm giving you 5K, please. Can I know the type of investment you want to put my 5,000 in? They will definitely answer you that, okay, this particular bucket is going to go into stocks, bonds, and this particular one, if you are in risk, you are someone that wants to take risk in foreign investments, will help you to put it in dollar investment, and this is the return you will get from it. Different information that you'll be able to have access to. So the next one is fixed deposits. I don't know if anybody has question or contribution that you want to chip in at this point before we go too far.
If they have questions, they can just drop it on the group chat.
Okay, all right.
Take
So the
questions
next,
at the end.
okay. The next one is fixed deposit. So this is when you put a lump sum of money for a particular period at a determined rate. So you can have 1 million naira that you are not using now. You can just walk to any bank and say, please, so let me put this money in your care for 1 year, and then they will give you the return on it. But the risk there is inflation risk because it is fixed deposits. They believe that you are not going to use that money for anything. You just want the money to sterilize there. So you just want them to keep the money for you. It's not like you are taking a risky investment, right? So the return on fixed deposits are usually low compared to other form of investments. So because of that, inflation risk can affect your investment. One of my friends did Wema Bank fixed deposits last year. And as at last year, the rate was 11%. And I think she kept 6 million naira in that account. So at the time, it was looking like, I don't have my whole 11%. And the fund liquidated, I think, June this year. Before the fund even liquidated, before she liquidated, she was already grumbling.
Yes.
Inflation has happened. Every other form of investment have increased their rate. Everything you can possibly imagine has even happened in the economy. In fact, as at maybe February, March, she was already saying, I should just liquidate this money instead of just putting it there. If I had known, I would have put this money somewhere else. In fact, make I go use my money chop chicken, save better. Was already grumbling that 11% as of last year. Now everybody has increased their own rate to 20-something. And because it is a fixed rate, the bank will not come and tell you that, we have increased our rate now. So those of you that put your fixed deposit in January last year, increase your rate. No, it is as at that particular date the rate at that particular date that you put the money. That is the rate that will count till when you liquidate it. So inflation might affect your investment. But the thing is, it is low risk. So if you are someone that does not have appetite for high risk, it might be a safe option for you. And then you have guaranteed returns. You are sure that you get your money back, especially if you are using Sorry?
No, sorry. It's Shada, your mic. Please
Sorry.
unmute your mic.
Okay.
No
So
problem.
especially if you are using credible organizations, and also you can have access to liquidity. You are sure that you'll be able to have access to your fund. It is guaranteed. And examples are different financial institutions. Another thing I'm going to say about fixed deposits, you have to be very careful at the same time. In the sense that you're looking for credible financial institution, you can also explore different rates from these financial institutions to determine the rate that works for you. As at that last year, when my friend did 11%, after she had put the money there, she now later found out that another financial institution, in fact, the financial institution where she's working with, which is First Bank, was already doing 13%. Do you get? So some of these financial institutions, some of them, they don't really need your deposits like that, so they might be giving you lower rates.
Yeah.
Why some that need your deposit desperately, they will give you higher rates. Do you get? So you might need to do research on the particular financial institution. But she was thinking that, I don't want First Bank people to think I have money. Let me go and put
Yeah,
this
there's
money
that one too, yes.
in another bank. And she
Mm.
went there when she now found out that, First Bank was already doing 30%, like, if I had known, I would have put my money in First Bank and even earn a little bit higher. That 2% might look insignificant, but at the end
For
of it,
amount, it is
yeah,
something. Oh.
exactly. Exactly. For someone else, like maybe you are doing small money, maybe like, I beg, how much is 2%? But by the time you calculate it for 1 year, you'll be like, it's something, or even if na 5K be difference, at least you use am chop shawarma when you liquidate your funds. So
It
it's
will even
still
cover your maybe maintenance
your
cost and stuff like the
cost.
expenses, exactly.
Yes. So it would be good for you to check all these financial institutions for the best rate. The next one is Agric. So currently, I'm really passionate about investment in Agric because one thing as human beings is we eat, we need to eat. So if you are able to do the right investment in Agric and get your money back, your money, you can become a rich person within the shortest period of time, as long as that agriculture investment is done right. So this is investment in farming, livestock, and crop production. But the thing about agriculture businesses, it is very, very risky. Me, I'm an as in real life example of someone that has suffered from agriculture. When I finished school, I studied agric in school, by the way, for both BSc and masters. So I'm one of those people that I don't want to work for any employer. I want to be my own employer. So I saved up funds and I started a fish farm then. And the first cycle was amazing. I was staying in Ilorin at the time. So because of that, the cost of living was not that much. The cost of even maintaining the business of the pond construction, I was using cement pond and then tanks for the fish farm then. The cost of that was not that much, and it was even in my parents' compound. So the first cycle, I made a lot of money because even before before they grew to table size that you start selling them in cubes, I already started serious marketing, words of mouth through the church, through my school, because I was doing masters in Unilorin. I already told all my lecturers and stuff like that. So the harvest period was really fantastic. I got a lot of money. I was already seeing myself as big babe. So I decided to scale up. I did the first round, I did 800 fishes. So the next round, I said, okay, since I have 2 ponds and bigger tanks, let me do 2,500 fishes. That was the first, that decision was the first mistake that I made at the beginning of that 2,500 fishes. And one thing is, I usually buy their feed for the month so that I don't have to worry about whatever cost again. Because once you buy their feed, you are fine. Then the next month you buy the feed. So I already bought the feed for the first month. So when they get to a particular size, you have to do sorting because some of them won't grow at the same rate. And we decided to do sorting one evening, and then they give them vaccine in the water. My brother and sister, we woke up the next morning after that sorting. My fishes were floating. I thought of us sat down, I started crying. This is serious busy. Me would have forecasted my cash flow. I can see myself in the big babe life in the next few months. And now these fishes are floating. So I was so sad about it and all of that. And I had to just quickly harvest whatever was left for them to go and smoke and then get some money back. So, but there are some people, I think what I learned from it was I didn't have enough technical competence to handle that volume, to handle that volume. So if you are someone that you are like me, so right now what I do is invest in people that have that technical expertise and they have experience, and then you get your return back. So nowadays I've been seeing a lot of platforms that are credible, that will tell you that you can put your money in this agric business
Yeah.
and get the amount of money back. And there's potential for high returns because of how risky agric business is.
Yeah.
They have to give you high returns than other form of investment. And you also have this feeling that you are also contributing to food security. And the other thing is there are different government initiatives that you can benefit from. If you are someone that wants to do the agric business for yourself, you can also apply for and different things. So an example of credible
Khadija,
platforms.
please mute your mic.
Okay. Example of platforms is Harvest. Harvest has a platform where you don't have to do the business yourself. You can put some money there on their website, on their platform. You'll be able to see the return, and for the total number of months, they can say 36% for 9 months for maize production, for cassava production, for poultry production. They will give you the different information that you need. And because it's a credible platform, you are assured of your investment returns, that you are going to get your money back, especially when you invest in a particular agri business that you are sure that is going to sell. The next one is cryptocurrencies and
Sorry, let me
forex.
add to that agric investment. So the thing
Okay.
about agric investment is, I think as of 2 years, 3 years ago, there were several platforms and they all felt legit. Farm sponsor, agro invest, or see, I've put my money and I've lost it too. So they might be legit today and anything can still happen. Is risky. So although be mindful of how much you put. No, maybe try it
Yes.
this period, try it another period. First test the waters first till you get that confidence in the app before you now put it there. So just be mindful.
You have to be, you have to be very mindful. They are very, very high risky businesses that are Greek. In fact, most times I think people should just try and involve themselves
Yes,
in
yes.
whatever agric business you want to invest in, because some of them, they are thieves. They will tell you that something just happened and all the maize in the farm just got burnt. There's nobody you will arrest because everybody knows that agribusiness is risky. But if you know that you can be involved in the day-to-day, then it will be beneficial for you.
Yep.
The next one is cryptocurrencies and forex. This one, very, very volatile, very, very risky. And it is usually unregulated yet. When crypto came out, they said this is the future. Crypto is going to be the global currency. Some organizations started accepting it as form of payment. And then Trump left the government that time, and Biden became the new president. And we saw a new wave of crypto snowdiving. There are people that have used all their life investment to buy Bitcoins at that time. And we saw how Bitcoin was just going down because it is not regulated. It is not backed against any assets. Even though the potential for return is very high, you will get huge amount of money, but it is also very, very risky. It is very volatile. Anything can affect any coin today. The same thing with forex. You are buying dollar today, so you are going to trade in dollar versus pounds, and maybe Uncle Putin can go and bomb somewhere, another country now, and then the forex market will just crash. Anything can affect those kind of investments. But if you are someone that has risk appetite, your chest can carry it. There are people that we've heard that some people collapse when they put their money in Forex. There was even one guy that I worked with like that. He used his girlfriend's money. His girlfriend kept some money with him and used it to trade Forex. And the money, he lost the money. And he came to the office and the girlfriend wanted to pay the school fees. And he came to the office, he was like, Temi, can you borrow me 200K? Wally, can you borrow me 250K? Kiniko, can you borrow me 80K? And we're all like, wait, is your landlord chasing you out of the house? Was like, I did Forex, so, and it's his girlfriend money. I cannot allow the girl to know. I said, it's now me that will borrow you money to go and pay your girlfriend.
And you use it again for Forex.
Kiniko, it cannot happen. But there are days that this same guy has cashed out big time, that he will even be mocking us in the office that you people don't know what is going on. Kiniko, my Kiniko is cashing out. I don't really understand it. And something that I don't really understand, I don't have to take position on currencies. I cannot put my money there. So when you want to do crypto and Forex, you have to be patient and you have to be very knowledgeable and you have to be able to research global economies and the factors that drive those currencies. It's the same thing with what is happening in Nigeria right now, where our dollar versus naira is moving anyhow. Some people have taken position that before December, dollar will probably hit 2,000 naira. If it works, it's a gain for them. At the same time, if it doesn't, and dollar moves from where we are now to 1,000 naira, they've lost a huge amount of money. So if you know what is driving these currencies and you're able to take the risk, there's potential for high returns. And it is decentralized. You don't have to give anybody your money to trade in all these currencies. You can do it by yourself as long as you can do the research and you have global accessibility. You'll be able to know what is going on in different countries. If anyone has seen anybody that is into Forex, you will see on their phone, they're always having one funny graph that is showing in a very funny way. But what they are actually monitoring is the global currency. That there are those people that you will call that, please, what is the value of yen to Kiniko? They will give you
ASAP.
ASAP. They are monitoring global currencies, taking positions. So that's one of the benefits. You can easily move your money in dollar to pounds, from pounds to euros, all those things. And examples are, like I said, the Bitcoin, the altcoin, and then the currency trading in different currencies. So, what are the tips for setting your savings and investment goals? First thing first, be smart. Be very, very smart. And smart is the same thing as what we all know. Let it be specific, let it be measurable, let it be achievable, let it be relevant, and let it be time-bound. When you want to be smart, how much am I making? What is my total income per month, per year? How much am I spending? What is the amount that is? And at the beginning of this class, I heard after saying, are you guys done with your budgeting? You have to be able to do all of this. You have to be aware. What are my existing obligations? What do I want to prioritize? Is it investment over savings or savings over investment? What is my financial goal in the long term? For example, if you want to be very specific, okay, you have to be very sure, I'm saving for emergency fund. How much do I need? It has to be measurable. I want to save 1 million naira for my emergency fund. Now, is it achievable? You will make sure it aligns with your goal. You want to save 1 million naira in the next 12 months, but your income is maybe 300K for the whole year. You can see that there is a disconnect, right? So you should be able to look at it that if I'm making so amount of money and I'm spending so amount of money, this is the amount I'll be able to put into this emergency fund. Then you must be relevant. You must be able to connect it to your goals, because you must be able to say, okay, is this money, this money that I'm saving, is it relevant to what I want to achieve in the next 12 months? I want to relocate in the next 12 months. Okay, I'm saving this money so that this emergency fund will also form part of what I will use for my relocation. And
Yeah.
it must be time bound within 1 year, between 6 months, whatever time you want to put it, it has to be very, very realistic. Number 2 tip is diversify. Make sure you spread your investment across different asset classes. You know, when some people went to go and withdraw their life savings and put it in MMM, we had different things that happened. Some people had high blood, some people collapsed, some people slumped and died. That's because if they had diversified that investment into, okay, let me put small money in MMM, let me put small in shares, let me put small in mutual fund, maybe they won't slump and die like that. So you have to diversify your portfolio. You must be able to balance it between high risk and low risk so that it will give you that flexibility, especially, but if you are someone that you know that your blood pressure is okay, your chest, you can go. It depends on your personal goals as well. Number 3 is regular reviews. Make sure you check it and you adjust it. When your circumstances change, if your income changes, you should be able to adjust your goals. You should be able to adjust maybe your savings or your investment. You should keep considering inflation when you are setting your goals. If inflation has moved from 30% that we are today to 50%, okay, how does that affect the amount I'm saving, the amount I'm investing? You should make sure that it will still help you to retain the purchasing power when you want to liquidate that investment. And number 4 thing, you must stay disciplined. This one is very hard, especially if you are someone that is buy notes like me. It will be very and make sure you don't liquidate your investments for something that are not really tangible or something that you know that you don't really need. Imagine someone liquidating their mutual fund to buy shoes. I don't know, might not really be making sense. So
Yeah.
make sure you are very disciplined, and if need be, consult the likes of AFSAT to advise you on the best savings plan and investment option. Don't prematurely liquidate your emergency funds and avoid cashing out anyhow. Just stay disciplined. It might be hard, but it is definitely worth it. Thank you for having me tonight. I'll be taking questions.
Yay. This was a very, very packed session. You guys have been quiet, so please unmute your mic. Unmute your mic. Temitope, please take it to the main slide so that they can see and ask questions. Yes. No,
Okay.
the other one. Yes. Jamila, I hope you're still on this call. Abdul Malik, Khadija, Shahada, please, it's time to ask questions.
Yes, well, I'm here.
Okay, please. How was the session? Hope it was enlightening.
Yes, it's enlightening.
Abdul Malik, are you here? I can't hear you. Where are your questions? Shahada, I hope you're still not having trouble with your network. You've been going on and off. Can you hear us?
Yes, Hafsat, I can hear you. And I was even going to thank our trainer for a very wonderful session. I enjoyed this more than the last time because the last time we had network issues.
Yes.
So thank you very much.
Any
God bless you.
questions? Hello, Shahada. I was
Okay, yes.
Yes.
Sorry, I have a question. So I know that our trainer had talked about different kind of investment options. And I know that prior to now, Money Chat with Hafsat would always tell us that you can also invest in yourself, like
Yes.
invest in your education and things like that.
Yes.
Okay. So I want to know if okay, personal development. Okay, thank you very much. Yeah. Thank you.
I
Yes,
mentioned it at
yes.
the beginning. That it's also very important. Personal development, career growth, they are also very, very important.
Yes, they are.
All right, thank you.
Thank
Because you're
you.
investing your safety is an asset. So in fact, it should be priority, especially if you want to increase your income. So that's like the most immediate way you can increase your income, right?
Okay.
Khadija,
Sorry.
no
Before you go to
problem.
the next question, the last question, we should go to our trainer and money chart with Afsat herself. So
Okay.
what percentage of my savings should go towards investment? Because I know usually when you want to invest, you need like a lump sum of money to do that. And Afsat has taught us various percentage of saving, the 50-30-20 rule and things like that.
Yeah.
So what part of my savings or what percentage of my savings can I dedicate towards investment?
Temitope, you
Thank
want to
you.
go first?
So, like I said, most people have this 50, 20, 30%
Yeah.
rule, which is very, very valid if you are able to maintain it. But the one that I usually debunk is you need a huge sum of money to go into investments. That's a lie. If you have 1K, put it somewhere, no matter how small it is. So if you are waiting till when you will be able to follow that 50, 20, 30% rule, you might be taking time because it might be hard at the beginning. But if you are able to start that culture of, okay, how much am I making? Can I take, even if it is 10% of my income right now conveniently and put it into savings and investments? You can apportion it based on your goal. If you are someone that
Exactly.
take risk, you can be able to say, okay, I will put 10% of my money in investment and 10% in savings. It depends on your personal goals and what your risk appetite is. Then you can put it in. That thing of you need 1 million naira to start investment is a lie. Gone are the days they used to do that. There are so many investment platforms that we take as low as 1,000 naira. And
Yep.
once you start growing, in fact, mutual funds, and that's the mistake that most people make. They think they need one big money to start mutual funds. My first mutual fund, I put 5,000 naira there. At the end of the month, when I got my first return, I'm like, the return was just 200 naira, by the way. But that one, I'm like, in 1 month, 5K, don't give me 200 naira. Okay, let me
What
put
if it
additional
is
money.
doubles?
Exactly. What if that 1,000, 5,000 naira becomes 20,000 naira? And like that was how I became a lover of mutual fund. Imagine if I was waiting till when I will have 20,000 naira to start. Believe me, I will still be waiting because I'll be with the mindset of I need to have huge money to be able
Before
to
you
follow
start.
the 20, 30,
Yeah.
is a very fantastic percentage to follow, but it does not necessarily mean you should follow it if it does not fit into your current income that you are making right now.
Thank you so much for that. Just to add to that, the idea about saving and investing, it depends on your goals. What are your objectives? So, for instance, a lot of people are unstable in the first place. You have debt that is piling up. So, your priority should be let you clear your debt because at the end of the day, that debt is still there. It is reducing your net worth, right? So, depending on the goals that you have immediately, you can determine, okay, I want to clear off my debt. I want to save so that I can pay for a course and then I'm going to start investing. Or if you feel like, okay, you're in a more comfortable situation and you want to allocate your savings, you want to split it. 20% for my savings will go into this, and the remaining percentage will go into investment is good, and you can start that way. But most times, you want to prioritize, maybe for instance, upskilling. Let's say you need to pay for a course and it is due in the next 2 months or whatever. You want to amass as much as possible, pay for that course, learn that skill, increase your income. Then now you can now start having 10,000 or 5,000 to start investing subsequently. So it depends on where you are financially, what are your priorities, and what you're willing to do. Investment is usually long term. You not go and remove it after 2 months or 3 months. No, you have to just keep adding every month. Every month you'll be adding. But for savings, you can like accumulate it for a few months and then use it to do something and stuff like that. So thank you so much for that question, Shada. I think now I'm going to pass it to Abdul Malik. Abdul Malik, I saw you've been having like a network issue, but can you hear me? Abdul Malik, can you hear me? Are you on this call? All right, no problem. Most of them are having network challenge today. I don't know why. Khadija, are you on the call too? I don't know if you have a question. And then
Yes, I'm
Jamila,
on the call
okay.
from
So
then.
do you have a question? Yeah, I know you did not join from the beginning, no. I know you did not join from the beginning, but then if you have a question, you can ask now, or you just maybe later, you can send me the question and then I'll forward it to our trainer. So I think the last person we have here is Jamila. So Jamila, do you have any question?
No, I don't have any question. I'm
Yay,
enjoying the
that's
section.
good. That's good. So it means everything that was explained today, you guys understand it. I don't want to come and see questions in my DM later. All right, so thank you so much, Temitope, for this session. It was very, very educating. So even I too, I was able to take on few things here. So it's very, very helpful. And then if others have questions at the end of the day, maybe I'll just compile it and send it to you. But thank you
No
so much for
problem.
today's session. I really appreciate it.
Thank you for having me.
Thank you, thank you, thank you. Bye.
Bye.
Thank you so much.
Let's not keep you on the call too much, please. Thank you so much. You can leave if you want to. However, we will still have a class to continue. Yep. Thank you, guys. All right, so sorry, let me share my screen. Time has really gone today, but let's see what we'll be able to do. What we'll be able to do today. I hope we are not tired yet, though. Okay. Can you guys see my screen?
Yes, I can see your screen.
All right, so today we were supposed to look at goal setting and we did the investment. So now, part of the reason why I brought this topic, it is very, very important, especially considering that we are now in the end of the year. So one thing we all want to do this month or next month is to do a financial review, an end of year review to evaluate your current situation. So the thing is, at the beginning of the year, some of us felt, oh, we were stable. During the year, so many things happened: inflation, cost of living, rent, transportation, everything skyrocketed. So you now want to assess yourself right now. How am I feeling? What are places that I did not do well? What are areas that you need to review? And something that can help you is by asking yourself some very critical questions. For instance, you want to ask yourself, how much have you been able to save so far? How much debt do you have outstanding? What goals did you achieve? Because I know most of us at the beginning of the year, we used to have goals. For instance, me, I said, I want to pay for this course. I want to do that course. I want to do this class and that one. I review to see, okay, I did this. Oh, I couldn't do this. This one has to be deferred. So why you're doing this is to realize, okay, which one are you going to transfer to 2025? Which of these goals are relevant and which ones are no longer relevant? Also, you want to ask yourself, how much investment do you have? So all of these questions are very important because they will make you see areas of improvement, what you want to do, what you want to prioritize. So now when you then take a moment to answer these questions, you will now be able to identify where you are currently. So for instance, somebody that is still broke, maybe throughout this year, you had to reach out to people to give you money. Maybe you called your daddy or you called your friend for help and stuff like that. That's like an evidence that you are still broke. Maybe you are not paying your bills on time, or you currently do not have any savings, or you are struggling with living by above your means, which means you are borrowing money and stuff like that. So if you have the symptoms, if you go over your financials and you realize that this is your story, then there is a chance that, okay, I think now we are back to being broke. Now I decide to differentiate broke from unstable. Broke is very, very broke, no money, you have to resort to people for help. But unstable is not, you're not that broke, you have your income, you're but you're probably relying on one source of income. And with today's economy now, one source of income is literally not the option again. We want to have several sources of income. So somebody that is unstable might have some debts. They might have been able to save, but maybe not too much, small savings, small goals, and they met maybe some of their financial goals. So we can say that person is a bit financially unstable. Now, for stable is people that have been able to maybe create additional streams of income for themselves. Or maybe this year there was one emergency that came and you were able to navigate that emergency without relying on anybody. You were able to do it yourself. You're able to save and invest regardless of the economic situation, and you're still living within your means. So when you ask yourself these important questions, when you evaluate yourself, you'll be able to identify if you are broke, if you're unstable, or if you are stable. So do we think we can answer this question right now? Where do we think we are? Where do we think we are? Me, I would say I am somewhat unstable. I met some of my goals. I do not have debt currently. I have little savings. And I would say I'm relying on one source of income. I think I've been able to diversify that a bit. So I'm in between unstable and getting stable. So what of you, Jamila, Shahada, Khadija? Where do we think we are?
I think I used to flip from financially broke to financially unstable. I used to still reach out to my family and friends, but I don't
Okay.
pay my bills late, no.
Okay, that's progress. That's at least progress. And one thing again about this life is we are
I
very
think
honest
I alternate. Okay,
between. Shada, you were talking, you alternate
Okay,
between
I
which
wanted
one?
to say that sometimes I financially unstable and financially stable, because sometimes I can see that for the financially stable, sometimes I have an additional stream of income. In fact, multiple. Sometimes I'm making money from sewing clothes, sometimes from selling tiger nuts and things like that.
Yeah.
Then yeah, I would just say I alternate between the two, financially unstable and stable.
Okay. Khadija, where do you think you fall right now?
For me, I would say I don't really know because I'm alternating between financially unstable and then financially stable. Sometimes multiple source of income, another time single source of income.
Okay. I guess we are all
No
alternating.
debts per se, then little savings and investment. And then I'm still living within my means. So I'm like shuffling between both.
That's good. I think we are all alternating. So that the thing is truly there's no really one answer, right? And that's why it's like a map, like we are growing, we are moving from one point to another. So for this year, like I said, what you now want to do is now assess them. Okay, how much did you save? Maybe like trying to look at your portfolio, try to maybe go over your bank balances, your list. If you had a goal list this year that you wrote somewhere, you want to go over it and check, okay, what did I achieve and what did I not achieve? Right? So that you now know, okay, which of this is relevant that I want to now do next year? What should I prioritize? What should I eliminate? So this thing just gives you like a head start for 2025, which we are all entering now. So speaking of which, I want us to look at setting smart financial goals. And the good thing is, Temitope has covered a part of it, right? So we're not going to take too much time. Now, setting goals is very, very important. Most of us at the beginning of the new year, we used to set goals. For instance, I say, okay, I want to swim, I want to gym, I want to build my Instagram page, I want to write CFA exams. All of these things are goals, right? But the things that we do not do is we fail to quantify it. And when you do not quantify something, you don't know if it is achievable or if it is even realistic. Now, I'll give you an example. When I say I want to swim or I want to be gymming, it means I am probably going to be paying gym subscription. Can I afford to be paying 20,000 every month for gym subscription, or I cannot? So now it already started telling me that, is that goal achievable or it is not achievable? I want to write CFA exam. Can I afford to pay it? Will I be able to save up for it? Is it within my income bracket or is it outside my income bracket? So everything that we want to do can be quantified, like almost everything. Even my Instagram page that I say I want to grow, I did some ads at some point. So did I account that, okay, well, this year I'll do ad what so amount or that amount, before you now start beating yourself about, oh, you did not achieve the goal or you achieved the goal. So when you set goal, quantify it. I want to get an apartment. How much will it cost you? I want to jackpot. I want to go abroad. How much do you need? I want to enroll for a course. How much do you need? So when you go and set like 10 goals, and those goals is like 5 million, but your income is 3 million, you can see that the chances of you achieving that goal is almost non-existent. So financial goal is where you quantify your regular goal, your personal goals, when you put a number to it, and then see if it is something that is feasible or something that is not feasible. So let me like go further. So for instance, number one is the goal has to be specific. What I mean by specific, when you want to save money at the beginning of the year, don't just say, I will save 1 million next year, or I will invest 200,000 in my business. Or don't just say, I want to save, I want to travel, or I want to pay for a course, or I want to pay my loan. Those are not specific. But when you say, I want to save 1 million naira, that is specific. When you say, I want to invest 200,000 in my business, that is specific. I want to pay 450,000 for project management costs, that is also specific. So it's important for your goal to be specific. The next thing is, can you measure that goal? Which is what I already say. So when you put a number to it, you can measure it. Also, measuring a goal means you determine how much you'll be allocating every month. For instance, you'll be saving 50,000 naira every month to meet your 250,000 target. Now you can measure it. You can measure the progress. Because when you say 50,000 January, February, March, you can start measuring that, okay, how many percentage of my goal have I achieved or have I not achieved, right? So another thing to look at is my goal achievable? Now, this is a very important part that we used to miss when we are setting a goal. For instance, now, your income level is what will determine if something is achievable for you or if it is not. And like the example I give here, so if you're earning 150,000 naira every month, is it possible for you to save 50,000? You need to be very certain. For somebody, it can be possible. For another person, it may not be possible because transportation is already like 50%. Feeding is like 50%. Utility, this one. So how will you save 50? How will you tell yourself you want to save 50? So you need to be very, very honest with yourself when you're setting goals. If you're earning 3 million every year, is it realistic for you to save 50% on it? It might not be. So within your financial power, you should be able to know that, okay, me, I cannot save 50,000 every month. Let's be honest, because of your needs. So instead of maybe saving 50,000, you can do maybe 40, 45, 35 and stuff like that. So it has to be certain, it has to be achievable. So speaking of which, I said it is not about setting several goals. Don't go and put 20 goals that you want to achieve in 2025. But it's about setting few achievable goals. Instead of 20, do five major ones and focus on those ones. Because right now, at the end of the year, most of us will go to next year with probably the same kind of list. You wrote 10 things, or you only cancel 2. The remaining 8, you take it and enter next year. You don't, stuff like that will demoralize you. They will not make you feel like you're doing anything with your life. They will make you feel like people are progressing, you are not progressing. So if you don't want to feel that kind of way, you have to make sure your goals are very, very achievable. Now, moving on. Another important factor is how relevant are your goals? Your goal is only relevant if it fits into your grant scheme? I have a friend that used to say the grant team of scheme, or I've forgotten the way they put it. So you have to know, does it fit into your future journey, your goal, where you want to head to, the path you want to see yourself? Oh, I want to become a billionaire. So these goals that you are putting, will they take you to become a billionaire in the next 10 years, in the next 5 years? So they need to be relevant. So you need to figure out what is important to you and what you should add in your goal. So now I give an example now. Maybe you want to travel abroad. It doesn't make sense, in my own opinion. You're traveling abroad, you are preparing to travel abroad, and then the next thing that comes to your mind is you want to go and buy a generator, or you want to go and buy a solar panel, or you want to go and buy a car, or you want to change your apartment. To me, it doesn't feel entirely rational. Another person can say, oh, when I want to travel, I will sell it. But when you sell it, it is going to reduce, the value will reduce, the market value will reduce. See that you're looking for proof of fund, that you're going to pay for visa, you're going to pay for flight ticket, and those are your priority. So you need to be be reasonable. Some of these things can happen. Okay, for instance, now, before I came here, I literally did not think it was going to happen. I did not see it happening. I was just preparing in advance. So I bought my fridge, I furnished my apartment and all of that. But the opportunity came and I had backup savings that helped me. I still had to sell some of these things, but I sold them at the same amount. Or will I have probably done that if I knew intentionally, if I had a specific date? No. So sometimes we can anticipate when it will happen, make a rational decision. It is only when you cannot anticipate some things that you will now say no. But if you are actively and consciously preparing to japa, then some things are priority and some things are not priority. Another one is you have loan, excessive loan. People are calling you every day. You now say, hey, you want to save money. Pay up your loan and don't disgrace yourself. Build a good credit score, and then you now start saving money. Another one is increasing your income. If you want to increase your income, if your priority is that, okay, well, by this year, I want to start earning in dollars, or by next year, I want to increase my income, then do things that will help you increase your income. Upskill, start a business, learn a course. Those are your priorities, and those are the things that should be number one on your goal, not I want to go for a vacation, or I want to buy this clothes, or I want to. So make sure that anything that you're putting on your goal list for 2025 is something that would make you feel closer to where you're heading to. So I hope we are together. Guys, are we together?
Yes, ma'am, we are together.
Okay. Abdulmalik, I see you are back too. Welcome back. All right, so moving on, our goals have to be time bound. When you don't put like a timeline to something, it will extend. Whenever it happens, it happens. Which is why at the beginning of the year, some of us say, I want to achieve this goal. But now it is November. That's when we are not trying to do it. Or December, that's when we are doing it. But if you tell yourself, okay, I will do this by January, this one by March, this one by June, it just makes you feel better. It makes you feel like you're making progress. Maybe if you are like maybe my kind of person that likes to see that I am progressing, I like working with time frame. For instance, I say, okay, well, by June, I'll finish my second semester exam. After that, I'll use the next 3 months summer period to write this exam. After this exam, I'll write this next one. After that one, I'll apply for this. And that way I feel like, okay, I'm making progress. I am doing something. But if you don't put a timeline, it will just happen whenever. You just say that it is the end of the year and it's not done anything, right? So if you want to save 1 million, tell yourself, is it by December? Is it by June? Is it by July you want to save the money? If you want to save for your rent, when do you want the money to be complete? If you want to pay your loan, when do you want to pay the loan? And what are you going to do towards paying the loan? If you want to pay for an exam, when? So when you put timeline, you already know that, okay, this is my priority now. Let me focus on this. When I achieve this goal, I'll move on to the next goal. When I achieve the next goal, I will move on to the other goal. So that by this time next year, you can track your progress. You can say that, okay, I have done this, I have done that. So I gave an example of what a SMART goal will look like. So for instance, now let's assume that my annual income is 3 million naira. So for me to earn 3 million every year, it means I am getting 250,000 naira every month. So I also made some assumptions. Let's say my expenses, feeding, transport, clothing is 50% of my income. That is 1.5 million. And then I also pay rent of 500,000. And I budget that this year, my personal spending is going to be 100,000 inside the money. So after my expenses, I also have goals that I want to achieve. Okay, next year, I want to invest into Money Chat with Hafsat. I want to go for a vacation at the beginning of the year. And then I want to pay for a digital marketing course that will help me. Now, if you plus all of this money, they are equal to 3 million. And that is how it is meant to be. But if you go and put digital marketing cost 500,000, who is going to help you balance it? It is no longer achievable. It is no longer looking realistic because your income cannot embrace that, except if you already have a plan on how to increase your income. And that should also reflect, okay, if I do this digital marketing course, I will earn 200,000. After I earn that, I'll give myself 3 months to start making money, and then I'll use that money to do another thing. So it has to be like realistic. It has to be very, very smart. So which is why I gave like what it will now look like. So when you're setting a SMART goal, you already know that, okay, you're earning 250,000 every month. It means 50% every month will go for your expenses, because your expenses is 50%, 125,000. You will now start telling yourself, okay, now how am I going to achieve all of this, my goal? Okay, I want to save my rent, for the digital marketing cost, I want to have the money ready by February. So which means in January and February, I am only saving for the cost. After I save the cost, I will now start saving for my rent. After I save for the rent, or while I am saving for rent, I can also be saving 50,000 monthly for my business. So which means every month when you receive 250,000, 125 will be your expense, then 150, 100 will be for your cost or your rent, and then 50 will be for your business. And then after you sort out maybe the business, you can now start saving for your vacation. So for instance, me, my birthday is October. So I like my vacation to like be during that period. So after I save for my business, or even from now, I can start doing 20,000 monthly. I am putting in my vacation account. So it gives you like an holistic way around it, how to prioritize your income based on the things that matter the most to you. It is specific, it is realistic, it is achievable, it's time bound. So this is what a SMART financial goal is meant to look like. So how many of us actually do this? Do we currently do this? Do we break down our goals like this? Jamila, Shahada, Khadija, we are not so much today on today's call. So do we break our goals like this, or we do not?
No, I don't break down my goals like this.
And I also don't break down. I just write down, and then little by little, by chance, if it comes tough, if the money doesn't gather, so
you see, by chance. So which means some of those tasks is like where their aspirations, they are not like maybe they are not realistic at times, right? So even I too, I never did. I won't say I've been doing this like maybe all the time, but maybe for like 2 years now, I've tried it. In fact, when I joined Sterling, when I just entered Lagos, that was when I said, no, I need to know where my finances is going. And I know the cost of living there. I do not want my story to be like that. So I made annual, like the money I was going to receive from day one to the year end, I have do it. Especially the permanent income, I did it. Any additional that came, I did not plan down. When they come, I will now plan it. And every month I'll be adjusting the way I'm seeing. And to be honest, that was how I was able to save. I financed my rent, got my apartment. That was what I used, and it helped me because I loved clarity. I loved direction, right? So it helped me. Also, other goals that I've maybe written down a few years ago that did not specify, it took longer. It took a year later or 2 years later, because some of those goals were longer term. But for short-term goals, like within a year, when I break them down, it guides me. Even this year, I did it. And by December now, I'm going to do for next year. And it's not even, it doesn't have to be maybe everything we cover, but I identify 2 to 3 priorities, and I will determine how I want to achieve those priorities. For instance, I want to save maybe flight tickets. I want to pay for my CFA Level 2 exam, and maybe I want to pay for another exam. I already know that these 3 are the major priority that I think I can do. And this is how much they will cost, and then I will prioritize them. So that way I will go all out, and any money I am getting, they will go there. Now, why is this important? Is because wealth, like a tree, grows from a tiny seed. The sooner you plant that seed, the sooner shall it start growing. So when you have a plan, you already know that, okay, if I do 20,000 for 10 months, that's 200,000. The 200,000 is exactly what I need for my vacation. So this month, I might not eat anything, but the fact that I've kept my 20,000 and I'm already imagining myself at the beach. I will survive. I will survive. But when you don't tell your mind when it will happen, you will feel depressed. And these are the ways that I use to like navigate balance my financial well-being. Most times I know I cannot afford something, but I want to know when will I be able to afford it. This year it helped me. For instance, I knew I wanted to go vacation severally. I had to delay it. But I did not just tell myself I will delay it. No, I acknowledge after when will this be able to happen? And I have a timeline and I'm working towards that. So that I feel stressed, but I know that, okay, March, where I'm counting down. I love countdowns. It helps. So when it comes to finances and achieving your goals, timelines like this can be very, very, very helpful. So I want to also, let me hide this floating bar. So I want to share, show us a demo presentation now. Let me see our bootcamp. Where is our bootcamp budget? So in our, what are they calling it? Bootcamp tracker. Okay, yes. So in our expense sheet, can you guys still see my screen? Or it's not showing? Can you see my Excel sheet?
Yes, I can see your screen.
Okay, okay. So you guys remember that in our tracker, we have another sheet called goal sheet. So we have seen the budget sheet, we have seen the expense sheet, and today we are going to be looking at our goal sheet. Can you guys see my goal sheet? Hello?
Yes, ma'am. I see
Okay.
it. Yes, ma'am.
Sorry. So you guys can see my goal sheet. So if you scroll to the down, there is a budget calculator that I created. It's very simple and easy to use. So you only need to do one thing. There's a place where there's this empty cell where I wrote monthly. This empty cell. What you need to do is write how much you receive every month. So for instance, I receive 200,000 every month. Okay. I don't know what's happening. No, it's not responding. No, I can't write inside the cell. Oh, okay. Sorry. Let me look at it again. What's happening? It's network. I am the owner of the file and it's telling me I can't edit it. Okay, so let me change it for us. All right, guys, give me a minute. Let me edit this. I should be able to. Okay. You know what? I'm going to open someone else's let me enter I'm going to open someone else's tracker and use it for this session. So I'm in a goal sheet now. I don't know, can you see my screen? Jamila, can you see my screen?
Yes, I can see your screen also. All
right. So inside the goal sheet, there's a part where we have budget calculator. When you scroll down, there's this cell that I want to write in, where you just write your monthly income, for instance, 200,000. So immediately you put it, you can see that every other cell populates. So what this is just telling you that, okay, in a month, you earn 200,000, but in a year, it is actually 2.4 million. Now, how do you want to spend it? Just to give yourself some just small presentation. So you cannot decide that, okay, I want to save 20% of this income. Or if you want to save more, you can change it here to 30%. So you can see it here. So you want to save 30%. 30% means every month you save 60,000 and in a year it becomes 720,000. On your personal spending, it becomes 20% because it cannot exceed 100%. What you want to spend cannot exceed 100%. For your wants, 20%, it means every month you have 40,000 naira for yourself. And every year it means you have spent 480,000 on yourself. And for your needs, let's assume it is 50%. It means every month, 100,000 is for your needs and 1.2 million in a year is for your needs. So what this is just trying to tell you is you should know what you can achieve now. So somebody that is earning 200,000 every month, any goal that you want to do right now cannot exceed maybe this 720,000. Or worst case, maybe 40%, 960,000. So that's like the value of whatever goal you want to do, whether it's savings, whether it's investment, whether it's a course. It just gives you an idea, and that is what you will now use to determine the goals that you want to do. So we all have this part, and during our one-on-one session, I'm going to walk you through it better. Now, another thing about this goal sheet is we all have goals that we want to achieve this year. So let's say my priority this year is I want to pay loan. Let's say I have loan. So what I'm going to do now is I will go to the goal sheet and write loan repayment. So far, I currently have 500,000 that I am owing somebody that I want to pay. So after I write the target amount, I will now determine how many months, in how many months time do I want to pay it? Is it in 3 months time? Is it in 5 months time? Or is it in 10 months time? So let's say I want to do it in, let's say, 5 months time. So now immediately I put the 5. Now the tracker is telling me that every month I must save 100,000 to achieve this goal. So basically this goal sheet is to help you expand your goals and so that you can track your progress. So in January, when I pay 100,000 to the person, I will come here and I'm going to write. I don't know if you can see right now, the tracker is telling me to start. There's a column here that is telling me to start. So it wants to see my progress. So in January, when I pay the person 100,000, I will come here and write it 100,000. In February, when I do the same thing, I will come here and I will write it to reflect it. So this way, you can be tracking your goal and to know what you've achieved and what you've not achieved from your goal. So during our one-on-one session, I'm going to walk everybody through how to do this. If you did not get it, no problem. No problem. So let's go back to our sheet. So we've taken so much time today. So I'm going to skip some parts and we are going to do this in our next session when we have more people on the call. So I have some things that we're supposed to look at, but we're not going to look at it today. We're going to look at it in our next session. It's nothing too much. So what we need to do left is, I want everybody to book a goal review session. So when I did this bootcamp, I told you guys that we're going to have 2 sessions. We've already done 1. So you have to book your second session. It is open from now till first week of December. So I'm going to share the link on the group chat and then you pick your session so that we can have a one-on-one session. And what we want to do is we want to talk about our goals and we want to prioritize our goals one by one. So I think this is where we are going to stop today. I had to brush through so many things. We have a lot we're supposed to stop today, but we're going to do it in the next session, plus our book review session. I hope we are still together.
Yes, ma'am. Yes, I'm with you.
So do we have any questions so far? Do we have any questions today? The goal setting part, do you have any questions so that I can answer that?
No questions from my end, because you already had the session with me this evening. Thank you.
Yes, no problem. All right, so in the group chat, I'm going to drop the link for the calendar. You guys can book your sessions, your second session. So for Shada, I would suggest you pick your own around maybe 15th to 16th December, thereabout. Jamila, you can book your own this week as soon as possible. Khadija, we've not even had our first session. So please, I am giving you this week the session. Maybe Friday, maybe Saturday, or even tomorrow, maybe afternoon. Anyone that is convenient for you. So please book your session so that we can talk. So if you have any question for this session, I'm going to do that in the last session. So on Saturday is our final session. Please let us all turn up. All right, guys. I'll see you guys next week. Bye.
Thank
Bye.
you.
Thank you so
Bye.
much for the
Thank
session.
you too. Bye. Thanks for
Thank
joining.
you so much. Bye.
Bye.